Hi everyone, I am Sevaga. Today I want to discuss about a stock called Crompton. That is listed in the NSE and the BSE, and it is also selected in the list of Nifty 150 Midcap list. So it is one of the midcap stocks. How we can classify a stock as mid-cap? If in the market capital of that particular stock is in between 100 crores and 2000 crores, those stocks are classified as mid-cap. If the stock market capital is more than 2000 crores, then those are large cap, and if it is less than 100 crores, those are small cap. Crampton is in the mid cap, and the Crompton is a company that are selling the electricals and the lighting products. Those are coming under the industry of consumer durables. Consumer durables, we can see a number of companies that are coming under the consumer durables. So it is always better to analyze a stock with its competitors in the same industry. That is the reason we can also concentrate in the industry level ratios for getting information about this company or getting and the investment details about this company. I have developed an application that is the objective of this application is to bring the data related to fundamental analysis of any company from various places using different tools, web scraping tools, and analytical tools, and everything. Once the data is available, that will be uploaded into MongoDB. Once the data is in MongoDB, then I have developed the MERN application using React.js and Node.js to bring this application. So every day we can refresh the data, and that will be available in this web application. That is the planning of that is the goal of this application. And the as we know, and the data is divided into different industries: consumer, construction materials, metals, telecommunications, media. Now our Crompton stock is coming under consumer durables. So it is in the second record of this particular table. And the first particular table contains the different measurements: market capital, PE, ROE, ROCE, dividend yield. The second table contains compounded profit and the compounded sales growth. The third one is ROE growth and stock price CAGR. And the last one is the shareholding patterns, the stocks coming under this industry. And if we want to know the particular details of that particular stock, then we can click the details button. The measurements of this stock is shown here, and that is followed by the shareholding pattern, the historical data of shareholding pattern, then the peer competitors data. The Crompton has peers as Siemens, Havers, ABB, and we can also discuss about this one, and that is followed by the historical data of different financial ratios of this stock. Before coming into this stock analysis, the Crompton stock analysis, let us give some idea about the measurements like P ratio, ROE, and ROCE. Then we can come here and how it can be compared with other stock. All those things we can discuss. One of the important ratios is price to earnings. The investors and analysts, they are using this ratio to analyze whether they can buy the stock or not. Actually, this PE ratio shows whether the stock is marketed undervalued or overvalued. If it is undervalued, then they can be inclined to buy this stock. But at the same time, it needs to be compared with others. Usually, the PE ratio can be compared with the index PE ratios. At present, the index ratio, the Nifty index ratio would be in the range of 20 or 22, and for uh, consumer durables industries, it is in the range of 56, 57. So, any stock that is having a B ratio below the index or below the industry level average, then that can be considered as a undervalued stock, and the investors and analysts can suggest that, and they can buy the stock considering other factors also. And we should not only see the current P ratio. We have to the range of the P ratio it gets come across. So there are higher end of the range and the lower end of the range. In the stock can be bought at the lower end of the range. Another one important ratio is ROE ratio. It is return on equity. It's a measurement for financial performance calculated by dividing net income by shareholders' equity. It is also showing the management efficiency. The ROE ratio considers only the equity, not the debt or the leverages in the company has made, or the liabilities the company has. So it is only considering the equity. The higher the ROE, the more efficiency company management is at generating income and growth from its equity financing. So a higher ROE is an attractive factors, one of the attractive factors for investing in that particular stock. The next one is the ROCE. It is the return it is the return on capital employed refers to a financial ratio that can be used to access a company's profitability and capital efficiency. This ratio denotes how well the company is generating profits from its capital as it is put to use. So it is also considering the debt and the liability. Not only the equity, it is also considering the debt and liquidity. Instead of using the net income, it is using um, the BAT ratio, before tax and interest income. So higher ratios tend to indicate that companies are profitable. ROE considers debt and other liabilities also. So when we compare the ROE and ROCE, ROE considers only the equity value. However, the ROCE considers both equity and debt. So it can give some more idea. So the capital intensive companies and the analysts and investors are looking into ROCE ratio. Then we can move into our Crompton related ratios now. The PE ratio of Crompton is 36, the 36.5. It is well below the industry level average PE. So it may be treated as a 36.5 is treated as a good stock to invest, because it can be considered as a undervalued stock. However, we need to see the historical of this PE ratio, and the ROE ratio for this is 26.3. It is a highly more than it is a higher value for other stocks also when we compare these stocks, and the ROCE value is 23.8. So here when the debt and the liability are also taken into consideration in the ROCE ratio, so it is in the range of 23.8, and the dividend yield is 0.84. So the P ratio 36.5 denotes that it is undervalued stock based on the average P ratio of industry is in the range of 56 to 57. ROE is really a good value 26.3, and the ROCE is 23.848, and it is giving a nominal 0.84 dividend yield. When we click the details, we can see these values, and the further values we can discuss about in the next video. Thank you. Let us discuss in the next video.